Hi, good day to all. I'm Kelvin here. Glad to be back after 2 weeks break for my study. So, welcome to this weekly technical outlook on the stock indices. So, I believe that most of us has been pretty much interesting to know what's going on for this coming week of 13th of September to 17th of September on the major stock indices that I cover usually, which is the S&P 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, especially after its strong rally since 2 weeks ago, and as well as the German 30 index. So before we start, let's take a look at the disclaimer slides first. All right. Okay, here we go. So, before we jump into the details of the technical elements as well as the trend bias of the respective major stock indices, let's take a look at these raw momentum data of the various key benchmark indices across the globe from US all the way to Asia as well as Europe. So what we could see over here is that as usual, I break down last week performance is prior week, then it's weekly performance, which is the prior 4 week average, versus the difference. That means last week performance versus a 4 week average, right? To actually measure a gauge of a rate of change in momentum. So what we could see last week, especially on the S&P, I believe that most of you have noticed that last week S&P has declined 5 consecutive sessions since the start of Monday after hitting a key resistance level that we highlighted earlier on, which is 45.40. Then thereafter it shaped a accumulated decline of 1.7% last week, 5 consecutive daily losses. So far, this kind of negative performance has not been seen since June this year. Okay, in terms of the percentage, all right. And what's surprising over here is, in fact, it started to have a drag across the major U.S. benchmark indices, from the Nasdaq 100 to the Dow Jones Industrial Average, and the worst performing is the small caps concentrated Russell 2000, which is down negative 2.81% for last week. So if we were to break down accordingly, if you look at the difference, right, it actually the worst performing country benchmark indices across the globe. That means what we are seeing over here is that a sea of red for the US indices in terms of last week performance, if we take the difference versus its prior 4 week average. So we start to see over here is that what it means is that momentum has really starts to slow down. Okay, as you all know that the benchmark US index, especially the one that is heavily concentrated on high quality technology stocks, which is the Nasdaq 100 and as well as the S&P 500, there has been outperforming within US itself and as well as the rest of the world since the start of Q2 this year. That's Q2 uh, quarterly team outlook, where we are expecting this to actually take shape, which is true. But last week, this tide had already started to turn in terms of the S&P 500 and the Nasdaq 100. So I believe that most of us are saying that, hey, is this the start of a major correction, or at least a multi-week correction, to actually see we're talking about perhaps 3 10% decline or so at least. Yeah, that's some Wall Street banks analyst team has kind of warned uh, via their publication across major media outlets. So later we talk more about that when I deep dive into the trend bias as well as the key technical elements of the S&P and Nasdaq 100. But what's interesting over here is that the prior underperformer, which is the Hong Kong Hang Seng Index as well as the Hang Seng Tech Index. So to cut the story short, you all know that recently since June, there has been a kind of a very stringent or rapid clampdown on the business sector of the China economy. That means it started from China tech stock, and now right now it seems to very clear that what the China economic planners want is to have a clampdown across all the economic sector. That means not even technology stocks or the big tech stocks which started in Alibaba. We wanted to have a cleanse across all the business sector to actually transfer the wealth towards the common man in the ground. They call it common prosperity plan. So that actually shocked the whole market market. Why? Because at the end of the day, that means we are saying that the private sector will start to see a less reduction, a lesser profitability sector. That means business will find it very hard to do business in China due to this stringent measure. So some of it we're talking about we may be going to a kind of a cultural revolution where previously was enacted by Chairman Mao Zedong that to actually have this cleansing of a private sector wealth and heading towards the giving back towards the common man in the ground. So there's lots of fear, and definitely there's lots of fear and very weak sentiment on Chinese related stocks, which actually caused the Hang Seng Index and the Hang Seng Tech Index to actually underperform in the last 3 months or so. So, but what's interesting over here is that in the prior last week and versus 4 weeks ago, the tide has really starts to change a bit. If you look at it over here, is that the 4 week average has starts to reduce in terms of its negativeness. That means its negative performance has starts to slow down. And in fact, last week it started, or 2 weeks ago, it really started to show a bit of it has really shown up performance among its global peers, especially on the Hang Seng Tech Index, where it's the prior week it rallied by 6 point. Pardon me. Oops. Let me go back again. 6.43%. So overall, right, if you were to look into this space over here, right, previously it was actually underperforming, and right now this underperformance has started to shrink. Okay, so I did highlight earlier on in my one of my opinion reports saying that hey, we may be due for a tactical rebound on the Hang Seng Tech Index, which indeed happened and causes definitely a push up on the Hang Seng Index as well. So now, most of us we've got to be quite cautious now, since it's already rebounded. Can it rebound further, and what are the key levels to watch? Okay, these are the most important thing we as traders we got to know. Okay, and if what key levels must hold, I would say that to actually substantiate or to actually support another round of tactical rebound. Okay, I will use tactical rebound over here because at this point in time, if you were to use technical analysis to analyze the Hang Seng Index as well as Hang Seng Tech Index, there is still no clear signs of we are in a kind of a major bottoming formation yet at this juncture after this close to about 1 trillion worth of market share value that's being wrapped up on the China big tech stocks from its high in February this year. And what's interesting is the Nikkei 225. So Nikkei 225, we did highlight that it actually rested at a very key long-term support level. Later, I'll share with you again on the chart. Uh, it bounces off from that level 2 weeks ago, and it shaped a very strong rally for the last 2 weeks, 4.3% and 5.38%. And now it's actually showing the best magnitude among its major peers by looking at the difference between last week performance and its prior 4 week average. So one of the reasons is actually the sudden resignation. Actually, it's caused also by number one, technically it's at a key support level. At this key support level, it actually kind of being reinforced or being kind of a not say reinforced. I will put the words enforced. Okay, enforced by a very sudden positive political news, which is i.e. the current PM has chose to resign. He actually stated over here is that due to his lack of ability to actually navigate Japan out of this coronavirus crisis. So right now there's a lot of speculation going place. This new PM will come in with a brand new, I would say, brand new approach in handling the situation in Japan. Also, there's talk surrounding that there's another fresh round of fiscal stimulus coming into the market. So that actually lead a rise in the Nikkei 225. And also, there's also a rebalancing of the constitution of the Nikkei 225. So some we have component stocks has been taken up, and we have added in several top performer in the last couple of months, such as Nintendo into this Nikkei 225. So that actually these are the two drivers, or I would say that fundamental drivers and political drivers that actually occur right at the key support level long term that causes this momentum to actually increases upwards. Okay, that means we have to have two factors at play: technical as well as surprisingly positive news flow on the political side, as well as on the I would say future earnings side due to the change of the constitution stocks in the Nikkei 225. Okay, then for the German 30 index, it's still the same old story. It's been sideways for close to about 2 months or so a year. So yeah, last week was negative 1%. that if you look at the difference between its performance versus its prior 4-week average is at negative 1.13%. All right. Now, breaking down on the weekly performance of the S&P 500. So very long, we didn't see a sea of red for a weekly performance on the S&P 500 index breakdown of the 11 sectors that we have. All right. So what we could see is that last week, underperformance is clustered by the industrials, healthcare, as well as real estate, negative 3.85%. So then we have yeah, definitely technology stock negative 1.4%, also dragged down by Friday, where we have a court ruling that is kind of ruled not in favor with Apple regarding about their payment in their app store. All right, that means those app developer has a choice to decide how to pay Apple. Okay, if they were to actually include their app inside Apple App Store. Okay, so that is the main drag on that. But one thing positive about the court ruling is that the judge didn't actually say that Apple has been practicing monopolistic practices. All right, so that's one of the positive side from that court ruling on Friday. But nevertheless, it still create a drag on the Apple stock, which is down 3% or so at the close, and dragging down the S&P information technology sector towards on Friday itself. So that is actually caused it to end negative in the rate or for last week. All right. So yeah. So if you look at monthly return, so monthly return as of 31st of August, so it's pretty positive on the index itself. So for the month of August, right, we see almost all the sectors. Oops. Okay, pardon me, due to the sensitivity of my mouse, all the sectors are in the green, except for the underperformance by the industrial and energy, which is about only close to 1% return, below the S&P 2.9% return and negative 2.8% return on the energy sector. Okay, so this is came within our expectation because we are during the Q2 outlook, we are actually expecting potential underperformance of cyclical sectors against the big tech stocks like communication services and information technology. So what's surprising over here is that previously the financial has been underperforming. It managed to suit up to be the top performer in the month of August, up 5%. All right, which is close to 2%, yeah, give or take around 2% plus premium over the S&P 500 index. Okay, so now key before I jump into the key technical analysis chart as well as the trend bias and key levels to watch on the various stock indices, let's quickly take a look at the economic landscape data releases for this week, 30th of September, 17th of September. So one highlight over here is definitely the inflation rate data of CPI, which everybody is believe is pretty much reason to watch. Why? Because at the end of the day, this particular data set will actually determine how fast the Fed will want to actually tighten or start interest rate high cycle. Forget about the tempering. Okay, so tempering is more or less done deal already. It's actually start before this year end. Now it's only that when will the first rate hike starts? Okay, so that's the big question that markets would like to know. So all this inflation rate here will actually shift the expectation of the markets. Okay, so that will be Singapore time 8:30 on Tuesday. Then definitely we have China data. So this data is also very important to watch. Why? Because we all know that China in the last couple of months has been suffering also or peak growth narrative. That means we start to see a slowdown in key economic data. Industrial production has been weak for 3 consecutive months. Retail sales, then you have manufacturing PMI also weak. Non-manufacturing PMI also lackluster. So, but however, the Chinese policy makers, they are in no hurry to actually do a kind of a mass liquidity pumping into the system. So they are pretty much uh, uh, I would say they're pretty much happy with the current state of the economic performance at this moment in time because they do not want to create another potential over leveraging in their financial system. So pretty much interested to see how will the Chinese policymakers react if we're going to see further weakening of such key economic data for the month of August that is due on the 10th of sorry Wednesday, pardon me, Wednesday at 10 a.m. Okay, then also rounding up, we have UK inflation as well on Wednesday. Then coupled with retail sales for on Thursday, which is pretty important data, as well as the consumer sentiment figure for September. This is the preliminary one, uh, due on Friday, 10 p.m. as well. All right. So now earnings as well as events. So on the highlight over here is that we are now coming towards the close of the Q2 kind of a earnings report cycle, more or less almost all the company, or I say close to 95% of the company in the S&P 500 has really reported their Q2 earnings. So there are a couple of more labs like Oracle, which is one of their fuel cell, is actually one of the solar energy team play stocks in US, as well as Jinko Solar reporting on this week. So what's going to highlight over here is definitely the key event of this week will be Apple. Okay, given what we start to its significant fall on last Friday. So on Tuesday, they will actually release a new products launch event where they will definitely highlight the key features of their, I would say that one of is their biggest revenue driver in their business, which is the iPhone, the new iPhone launch, as well as iWatch, as well as I believe that some of the MacBook Pro, the new series as well, which is the laptop. So pretty much interesting to see what's the pricing like, and as well as what are the new key features that this product actually offer to be able to potentially drive future revenue growth for Apple, given that these products, especially the Apple iPhones is the main revenue generator in the last 10 years or so for Apple. All right. All right. Now let's dive now into the technical chart, okay, which I believe most of you have been wanting to see. Okay, so before we go into the S&P 500, as usual, let's take a look at the one of the proxy, which is the key risk on, risk off proxy that I tend to monitor very closely to give me a feel of the global market space, whether it's risk on or risk off. So the one that I like to see one of it is the S&P. It's not the S&P, pardon me. It's the iShares Philadelphia Semiconductor ETF. So it's a basket of big semiconductor stocks. They are bundled together like an index and it's listed on the US stock exchange tradable. Yeah, under this is exchange ETF called iShares PHLX Semiconductor ETF, or iSOX in short, the ticker. So what I could see over here is that it has been slowly churning upwards, higher high and higher low, holding above the 100-day moving average, as well as trading within this ascending channel that is in place since the low of 20th of October 2020, which is last year. So if you look at the momentum on the RSI, still holding above a key bunch of key support level at the 43% and the 37% level. All right. So what we could see is that momentum wise is still pretty much healthy. Hasn't really go into the overbought level yet, where indicating to us that the upside momentum is actually overstretched from a medium term perspective. So what it means that momentum is still supporting further potential upside. Okay. So what we have over here is that we have a shorter term support that we have for this week, which is at 449.70, okay, which is also very close to the 100-day moving average, as well as the ascending channel support of this channel that is in place since 20th of October 2020 low. It's coming at confluencing at 449.70. So what we are actually expecting is still no change in this ongoing bullish configuration of the semiconductor ETF. With the key medium-term support at this 42360, which is also the 200-day moving average. So as long as 42360 holds didn't break to the downside, we are still potentially seeing a kind of a further potential up move to actually test the next resistance at 495, which is a Fibo confluence of Fibo projection level, and as well as the upper the median line of this ascending channel as well at 495. Okay, so however, if you have a daily close below 42360, then all bets are off, and we are heading towards a kind of a corrective move down towards 375.60. All right, then now going towards the S&P. So what we could see over here is that the bullish configuration is still intact in this risk on risk off proxy. So it's still risk on, given that it's still positive, right, for the iStocks in terms of its technical configuration. So what it means that over here is that we have not reached a state of risk off yet to justify risk off yet. So, but nevertheless, we got to see individual component um, index to see the timing of the ongoing risk on behavior. So let's take a look at the S&P 500. Going to the S&P 500 on the daily chart, if you recall that we are still en route to this wave three target in the terms of Elliott wave. We're talking about the impulsive wave three. So after an impulsive wave three end, we may start to see a wave four. So this wave four, because this is a medium term scenario, that means we're talking about a wave four can last from a month to 3 months. So what we could see over here is that after potentially hitting this 4630 wave three target that we derived earlier on, based on the cluster of Fibo expansion level, we may start to see another round of corrective pullback, similar to what we see in August to October last year, which is about a month. So a corrective pullback after an impulsive bracket wave three target will last for around 1 to 3 months, because this is a higher time level. It's not being derived on the hourly chart, where a wave three target will last for only 1 or 2 days. But this one is derived on the daily time frame. So after a impulsive wave three, there will be a corrective wave four. So but this wave four will have a higher duration or longer duration, pardon me, potentially. All right, so just bear in mind that the timing wise, we may start to see potentially a final push up this couple of weeks to actually look at a corrective risk of a corrective multi-month or multi-week corrective down move to happen thereafter. Okay, so now bringing on towards the okay, what we see. Okay, so this week over here is that yes, this pullback takes shape. On the highlight, yeah, this pullback has already taken shape last week, and where we are right now is at the key 50-day moving average that managed to survive or act as a floor since May, 13th of May this year, or in fact not May, March. Okay, since March. So it's close to about I would say 6 months, 6 months plus of a very 6 months plus of persistent support that this 50-day moving average has managed to act in terms of every potential dip. And also what we could see here is that this RSI, the way it dipped, the RSI managed to dip down. It hasn't dipped down from an extreme oversold level, but a kind of a very close to a kind of a resistance level that was formed over here. But where is it right now is now back towards the ascending support level that is in place since 20th October 2020 low. Okay, back at this 45% level. So which is also indicating to us that momentum may start to resume again potentially. Uh, right exactly at the 50-day where the price action is actually trading close to the 50-day moving average. So we have two signs of positive elements that is actually pointing to us right now on the S&P 500. Now, how about the 4-hour chart, the lower time frame chart? So if you look at the lower time frame chart over here, right, what we could see is I want to highlight the last push down. We start to see a series of lower low, okay, lower low, but your RSI is not showing lower low, it's showing similar low. Can see? So what we could see, this phenomenon is called a bullish divergence. That means what it means that on the shorter time frame, last week push down is being overdone in terms of the downside momentum is kind of overstretched, where it reaches very close to the 50-day moving average that we see earlier on the daily chart, a higher time frame chart that has more significance of a 4-hour chart, plus the daily RSI indicator is also showing positive configuration. So we have a third element that is actually supporting a potential up move from here, potentially. So what we do over here is that I have no change on my key support level, which is 43.80. Still recall that before I go on leave 2 weeks ago, we have a first target, which is at 45.40. Okay, it's already met 45.40. So 45.50 was the high on 3rd of September. Then before this pullback take shape, right? So it hit the first target that we have, 45.40. So now the pullback has really taken shape as expected, because still recall that 45.40 we expecting a kind of pullback. So right now what we're seeing over here is that based on the current positive technical elements that I highlighted earlier on, yes, potentially as long as 43.80 holds, which is the close to the 50-day moving average, we may start to see this potential residual final push up towards 46.30 slash 60, which is the kind of major impulsive wave 3 target based on the Elliott wave principle. Before, after that, hitting this level, we may start to see a kind of a 1 to 3 months corrective down move that we highlighted earlier that actually took shape earlier last year, which is this period of 1st of September to 29th October. Very similar to this kind of corrective configuration. Okay, to actually retrace this impulsive wave three that started from the low of 30th of October, which is pretty much reasonable given that this we call it medium term uptrend that from the low of 30th of October has been taking shape for close to a year already, coming close to a year, uh, which is yeah, because now in the month of September, which is very close to a year. So I would say that it's pretty natural for the price action to do a kind of a multi-week or 1 month, 1 to 3 months of corrective decline or corrective down move. Then from there we see how the down move will react from there. It could be a zigzag to see lower low, or it could be a triangle formation. We will not know until the first few weeks of movement that is being done. All right. So now we only could highlight the key levels to actually watch. Okay. So, but nevertheless, if we break below 4380, a kind of a daily close below it, there we will say that the odds has already kind of kickstarted that 1 to 3 months of corrective down move with the first support level, the target which is at 42.35. All right. Okay. So now the Nasdaq 100. Okay. So Nasdaq 100 over here. So Nasdaq 100, what we have is that we have a target, the first resistance to which is at 15,600 slash 15,630 has already been met as well, with the high on 6th of September as 15,709. So what we see right here is that also very similar that kind of pullback that takes shape on the Nasdaq 100. Okay, with the 50-day moving average now coming at support at 15,140, and the daily RSI is also now resting at a key support level at 50%. Okay, so what it means that over here is that yeah, no clear signs of a bearish divergence as well to be seen on the daily RSI. So what we could see potentially is also another kind of a residual push up in terms of timing wise based on the Elliott wave principle, is that this potential major impulsive wave 3 target at 15,990. So going to the 4-hour chart, right? Okay, back to the 4-hour chart. So what you could see over the 4-hour chart over here is it's also coming very close to the lower boundary of this ascending channel support, short-term one from 13th of May 2021 low, which is also confluence now at the 15,140 level, which is the 50-day moving average. So as long as this level hold, right, we potentially could see the Nasdaq 100 to undergo this residual push up towards retest of last week high, which is 15,700. Then thereafter 15,090 slash a bit of excess, which is 16,090 based on a confluence of Fibo expansion level that I draw over here. We're so close to the top of this ascending channel as well. All right, so 15,090 slash 16,090 is the key risk level to watch on the upside. That means, i.e., what it means that once it hit this level here, if it start to show any signs of exhaustion, let's say from the appearance of a bearish daily candlestick pattern, this could more or less increase the odds of that potential 1 to 3 months corrective movement that were to take shape in the months ahead for the month of October, for coming towards the month of you know, September to October, pardon me, yeah, for this year. So then definitely a daily close below 15,140 will actually invalidate the bullish uh, uh, um, scenario to actually kickstart that 1 to 3 months corrective move to actually target the first support at 15,780 slash 14,780 slash 14,500. Okay, pardon me. Okay, now moving on to the Hong Kong. So what we see in Hong Kong over here is that last week we actually, as 2 weeks ago, we are expecting a push up to retest this swing high area, and this former support level turns to the resistance, which is at 26,700 slash 27,000. All right. So more or less, it came very close to it, where we start to see a high that has taken shape last week, 8th of September, or 2 weeks ago, which is at 26,521, and the price starts to do kind of a pullback again. So where does it stop over here is that it actually stopped very closely to the 61.8% retracement. If I were to draw this move here, from the low of 20th of August all the way up to this September high. Okay, very close to the 61.8% retracement, which is at 25,230. So what we do over here is that still kind of pretty unchanged. We're still using this kind of a an identical swing low area, which is my medium term pivotal support at 24,750 as my key medium term support level that we have for a couple of weeks. For 2 weeks ago, the same for this week, because definitely this is the key support level to watch, given that it didn't break since this drastic move down that has been triggered by this renewed clampdown on the Chinese private sector, the private sector in the Chinese economy. So it managed to survive. So definitely psychologically wise, there is actually some kind of bullish pressure that's being stepped into the market. Be it okay, because right now we are just analyzing sentiment, not really fundamental. So we all know that there is sentiment that is start to turn positive every time we hit this level based on the past behavior. What we could see over here right now is potentially it may happen again. So what we do over here is we will keep this as a key medium-term pivotal support. So as long as there's no daily close below this level, no daily close below this level, we're still expecting a kind of push up at least to retest this former swing high level of 11 August and the pullbacks, the former support level turn resistance at this zone, which is at 26,750 slash 27,000 level, right? This area here. So definitely, if you are talking about for clearer signs of the bulls to actually come back into the picture, most I would say that to see a kind of a multi-month up move, right, it got to definitely break above 28,170, which is the descending trend line that kept 18th of February high. So that is this year high, which is also the 52-week high. And previous rally has been kept below this level. So definitely this level got to be taken out before we can say that in terms of probability, the odds has kind of increased towards a multi-month recovery for the Hang Seng Index, or else all things equal, we may only start to see a kind of a sideways movement. So just push up towards the top of this range. Then thereafter, it may just go back down again. Okay, trading towards the lower boundary of this support level. Okay, so that's the strategy that we have for the Hong Kong 50 index or the Hang Seng Index for this week. Okay, now moving on to the Nikkei 225, which is, or the Japan 225, which has a stellar return of close to, I draw you, I think it's close, it's 15% return push up from that key long-term pivotal support that we highlighted earlier. Okay, so very interestingly, this is how technical analysis work, is that once the price actually hit certain key levels, and it will be reinforced by surprising news flows. Okay, so okay, what is this key level again? You still recall that this long-term pivot that I have for the start of my Q2 outlook, which we highlighted 36,880, which is the 50-week moving average as well. So what we're expecting the price to pull back here, then this is where it may act as a magnet to actually see a potential reversal. So at that point in time, right, last week, we were not so aggressive. We just play up potentially towards the 28860 level, which is the top of this complex or expanding wedge with sideways kind of a configuration. And in fact, on the 2nd of September, it has a daily breakout and breakthrough above it from here. So what we could see over here is that from the key support of 26,880, the long-term key support, pivotal support level, it has really rallied close to 13%. Okay, it's a very steep rally of 13% within 2 weeks. Okay, so in fact, if you look at the movement over here, right, it's pretty similar of what we start to see earlier on at this point in time from November. Okay, pretty much earlier. But in terms of the timing wise, it only take 2 weeks to actually rally to this level, which is pretty much remarkable. And because of the short span of time that taken for it to go up, so I believe that very likely is due to short covering uh, as well that drive this very short term push up with a short term it drive this magnitude that has been seen within a relatively a shorter time frame, okay, to achieve such a strong return or a magnificent return of 13%. So definitely it is the daily RSI to extreme overbought level. All right. Okay, so in fact, right now the daily RSI, right, is at the overbought level that is coming very close to the extreme one since the start of this rally, this major rally since 16 March 2020 low. So the extreme level is 81. So it's coming very close to this extreme overbought level. Okay, so what it means that over here is that this upside momentum is kind of getting overstretched. Okay, as and also right now it's already approached to that 16th of Feb 2021 high as well, which is at 13,716. So in fact, this is also a kind of a 13-year high. If yeah, if you could recall, it's a 13-year high as well, 13-year high. So it kind of approached a significant level, and with this kind of overstretched momentum, we may start to see a bit of consolidation first before a next leg up. Okay, so where is the next resistance? Is at this level at 32,400 slash 32,850, which is a FIBO level as well, FIBO expansion level. All right, so now going to the 4-hour chart, let's see what's cooking on the 4-hour chart. So very interesting, right? If we go to the 4-hour chart, right, the last price movement from 6th of February, right, all the way until today, it starts to trade in this kind of ascending wedge, but it's a bearish ascending wedge. So what it means that usually bearish ascending wedge, right, appears at the top end. Usually, it appears at the top end of after a very steep up move. It indicates to us that the momentum has started to slow down. That means what it means, the magnitude of the high, okay, the magnitude of the higher high is lesser than the magnitude of the higher low. So that this gives you two converging lines towards the apex. That's called the bearish ascending wedge. So if you could take these two apex, right, or this price movement of the ascending wedge of price movement, and we plot it in parallel with this daily the 4-hour RSI, which measures momentum, we could see very clearly that since the start of this ascending wedge, we're showing higher high, but the RSI now is showing lower high. So very clearly that we are start to see a kind of a slowdown in short-term momentum, coupled with the price action showing this kind of bearish price configuration, at least in the short term. That means what is telling us that this up move here, we are coming close to a tail end. Okay, then those who knows elliott wave, right, is a wave 1, wave 2, wave 3, wave 4, wave 5 with a fifth wave target at one time. Okay, one time FIBO projection, taking from the this one, taking from the height, the length of wave 1, which is confluence at 13,716 as well. So what we could see over here is that potentially we could see a kind of a push up towards 13,160, 13,716, pardon me, 30,716, 13,716. As long as it did have a daily close above 30,716 and a break below the trigger level, which is the low of 11th of September, the last swing low that we have so far, which is 13,090, we may see a kind of a pullback, or at least 1 to 2 weeks of a decline pullback towards this next support level at 29,600 slash 29,470 before another recovery or another impulsive uplift takes shape from here. So nevertheless, do keep a close watch on this Japan 225. We may start to see a kind of a extreme overbought in terms of upside momentum that we start to see 2 weeks ago, that's been derived by the 2 weeks ago steep price action, where price action may start to mean revert down back towards a mean level, which is the support level, which is at 29,600 slash 29,470. But nevertheless, if we have a daily close above 30,760, then this particular mean reversion corrective down move is likely to be invalidated to see another strong push up towards the next resistance level at 31,680. All right. Yes, we have the Nikkei 225 or the Japan 225. Then next will be the German 30 index. So for German 30 index, right, if you recall that since the high of 12th of July, it's been trading in a very sideways formation. Yes, it's going to churn upwards. So after it churn upwards, right, to see a fresh all-time high on 13th of August, which is 16,030, then it start to go sideways again. Okay, it's in sideways again. But what's interesting over here is that last week price action has led it to kind of retest its 100-day moving average that managed to act as a support for the lows of 19th of July and previously from 28th of January 2021. Okay, and the 200-day moving average is at this 14,800. So daily RSI also pretty interesting right now, managed to bounce off from this very significant ascending support that is in place since the low of 19th of March, which is the start of this ongoing major uptrend. Okay, now it's back to this significant corresponding support level, which is at the 38%. Okay, 38% level. So what it means that over here is that momentum indicator is indicating to us that it's bouncing off from a significant support level, confluencing with the price action that managed to help right at this 100-day moving average as well. Okay, so what we could see over here is that the strategy is no change that I have for last week, which is at 14,420. So just bear in mind that we're going to be a bit cautious going forward over here is that the resistance that we highlight earlier on is at 16,070/200 level. No change in the last 2 weeks really. Yeah, that's the resistance. That above that, we will start to see 16,600 over here. So what we could see this level 16,680. Yeah. Okay, the next resistance after the 16,070, 16,200. So what we could see is that the price action, right, since the high of 14th of June, right, it's been now a congestion or start to evolve within this bearish ascending wedge formation potentially. That means we start to see the magnitude of the higher high is getting lesser than the magnitude of the lower low. But what's positive over here is that there's no clear signs of a bearish divergence yet on the daily RSI, on the 4-hour RSI. Okay, pardon, on the 4-hour RSI. So yeah, just keep a lookout, keep a close watch on this price action on the German 30 index. So German 30 index for this week, we still maintain that bullish bias heading up towards the first resistance at 16,070/200. Then thereafter, right, we're going to see how the price uh, behave at this resistance level to actually justify or to make a call whether we really start to see a tipping point where there will be a risk of a kind of a multi-week corrective down move from here. So now as long as 15,420 holds, we still maintain that bullish bias towards this 16,070/200. And on the other hand, a daily close below 15,420 will invalidate this bullish bias to see this corrective down move or to kickstart that multi-week corrective down move towards the first support of 14,800 level. All right, so which is also the 200-day moving average. Okay, 14,800. Okay, so with that, I've kind of a wrap up this week technical outlook on the major stock indices. So what we could see now is that the S&P 500 and the Nasdaq 100 is now approaching a key inflection level where we may see a tipping point in this multi-month of a medium-term up move since October, and the risk actually increases for at least a 1 to 3 months of corrective decline on the S&P 500 and the Nasdaq 100 level from here. Then the rest of the major indices over here is that it's still holding above their key support level. So still looking forward that potential push up level on this on the Japan on the Hang Seng index that is reaching the range, for the Japan pardon me, for the German 30 index will be this 16,070/200 level. But we need to keep a close watch how the price behave once it hit this level due to this bearish ascending wedge that has been forming in the 4-hour chart since 14th of June. And as for the Nikkei 225 or the Japan 225, we look at last 2 weeks of price action is pretty steep, where it starts to actually increases the risk of at least 1 to 2 weeks of mean reversion decline to actually correct this overstretch upside momentum. Okay, so with that, have a great trading week ahead, and I'll see you all next in my next video.